Hello everyone. Thank you guys for coming back. Today's video is going to be on some of my favorite algorithmic signatures I've learned while studying and trading ICT concepts. Okay, so first we will start out with consequent encroachment, or abbreviated CE, as you've probably heard ICT describe. We will look at how I use the CE of inversions, new week opening gap, or new day opening gap, and how I use consequent encroachment with higher time frame PD arrays to internalize order flow. So first example here. First off, if you guys haven't seen my previous video discussing the silver bullet and inversion model, this was a great example of it. This is a 1-minute chart. So I will link that video for you guys to watch as well. And you'll get a more in-depth explanation on why this was a good entry to go short here, attacking this internal range liquidity. That being said, looking at an algorithmic signature here, price closes below this BISI. So this BISI becomes what? An inversion, fair value gap. And now on these retracements, 1, 2, and 3, does price reach the consequent encroachment, or in other words, the 50% level of this inversion? And that is the white dashed line in the middle. No, it can't even reach there. So that is an algorithmic signature telling us that price is going to want to reach for sell side. Okay? It is permissible for wicks to come above that. It's permissible for wicks to touch the CE of the inversion fair value gap. But best case scenario, this is the algorithm telling us that price is heavy and it's going to want to seek sell side. One of my favorite signatures to see, and it's what I want to see after I enter with the inversion model. Okay? Right here we have a hourly chart on NASDAQ, and we're looking at a new week opening gap down here. So we have new week opening gap created. We dip down into what? Some random level? No. To the tick, exactly, consequent encroachment of the new week opening gap. Okay, so that in and of itself, after we get above and expand away, that's price telling us that, at least for this short term, it doesn't want to go lower. Now, for all of these retracements back into new week opening gap, are any of them reaching consequent encroachment, which is this red dashed line? No. We come down, we fail to get there. We come down again, we fail to get there. We come down one more time, we fail to get there. Okay? That's the same thing as the inversion. It's the algorithmic signature telling us that price is strong and it doesn't want to even go down to consequent encroachment. Again, it's permissible for wicks to come down here. It's permissible for wicks to dig down to the bottom of the new week opening gap as long as the bodies stay in. But this is a strong algorithmic signature telling us that price is refusing to go down there and it's going to seek buy side. Okay, and as you can see, we expanded away from this structure, these failures, into the new week opening gap CE, and attacked buy side liquidity. And lastly, for the consequent encroachment examples, this is ES daily chart. You guys probably recognize it if you have been following price as of recent. This is a daily SIBI. Okay, so a higher time frame PD array. What has order flow been in this example? Bearish, right? So once price comes back up to this premium inefficiency, this premium higher time frame PD array, what do we want to monitor? Just the low? No, we want to monitor consequent encroachment. Do any of the bodies close above consequent encroachment, which is this white line? No, not here, not here, not here, not these two candles that were inside this fair value gap. Do we wick above? Yes, that's permissible. Okay, but what does ICT always say? The wicks do the damage, the bodies tell the story, right? On this candle here, when price opens up and we go up for that manipulation leg, that's the Judas swing. Breakout traders who think price is going to keep going up are long there and then they're trapped. But since we understand we want to be watching consequent encroachment of these levels, we don't get fooled by that. All right, we're more hesitant to wait because price could fail here, right, at consequent encroachment. And it's exactly what we see. We come back up into it one more time and then sell off. Okay, algorithmic signature telling us that price is going to want to continue to reach for sell side. So continuing with algorithmic signatures, now we will look at mean threshold, which is just the same thing as consequent encroachment, the 50% level, but we just classify that with breakers and order blocks, okay? So looking at this example, this is a 1 minute chart, and we're going to expand on this price action here, right? It looks like chop, it looks random right now, but we're going to take a deep look into this, into some of the more advanced concepts, and build onto this. And there's actually a lot going on in this price action right here. Okay, but to start off, we have this down close candle, right? So if our bias is bullish, what do we want to see down close candles do? Support price. Okay, more specifically, what levels do we watch? The high, mean threshold, and the low. So if I take my fib from the high of this last down close candle to the low, this is mean threshold. What do we do? Wicking into it, right? This is permissible, just a little mohawk below as ICT teaches, to the tick here and failure to get to it here. Okay, so that is an algorithmic signature showing us that price is still being supported and the idea of a long could still be on for a continuation upwards. Okay, so this sell, if we're in no trade here, no long, no short, this sell, or if we're looking to get a short right below this low, we know that we want to be monitoring how we act at mean threshold of this order block. Do we respect it? Do we displace through it? If we displace through it, it would be confirmation or increase the likelihood that we could go lower because we're disrespecting a key level, right? Mean threshold of a bullish order block. But are we displacing through it? No. The bodies aren't even closing on it. Every time we touch it, we're wicking up, right? 1, 2, failure to get to it. Okay. Now, expanding on this, if we see that initial algorithmic signature from the mean threshold of this bullish order block, once we get above this structure, right? Once we displace away to the upside, this should be a balanced price range. Why? This is all time distortion. We're just chopping around in it. But what are we giving it? We're giving it sell side and buy side, sell side and buy side, sell side and buy side delivery, back and forth. So price should not be inefficient in here. By extension, it should be balanced. Okay? So it is reasonable after the bounce off of the mean threshold of this bullish order block and this becoming a balanced price range, it's reasonable for us to expect price to find support here and not come back down into this balanced price range. Okay? Now looking into this further, what else do we see after we create this balanced price range, after we expand away from this structure? What is this retracement doing? Coming back to the top portion of this balanced price range, but more specifically, the breaker closing price. Okay, so if we see this sell, instead of just longing at this fair value gap, we want to see, are we going to respect this breaker and the top portion of this balanced price range? Now, how do we continue to internalize this order flow? Once we see us expand above this down close candle off of this bullish breaker, out of the top portion of this balanced price range, after we've seen the mean threshold offer support to this structure, once we see this, the second we trade above the high of this down close candle, that is your what? Your change in state of delivery. Okay, so we internalize that. What do we look for after the change in state of delivery? We look for the order block high and the order block mean threshold to see if they support price. Does the order block mean threshold support price here? Yes, to the tick. We expand higher. And one little nugget, what are we doing by extension? What should we expect by extension? After all these bullish algorithmic signatures showing us that price does not want to go lower, what should we expect? Premium PD arrays to fail. So using all of these algorithmic signatures, this is how you can predict, this is how you can expect these PD arrays to fail. Okay, so we're going to keep going further into this, a little more advanced, but see how it all comes together. Okay, so if you were to frame a trade idea around this, after the mean threshold of this original order block, supporting price, after this balanced price range, supporting price, after this breaker, closing price, supporting price to the tick, after this mean threshold, supporting price to the tick, what should you trust? Price shouldn't need to go back down in here. By extension, it shouldn't need to break this low. Okay? So if you were to frame a trade here to go long, you could enter at the order block high, the order block mean threshold, right? Any of these volume imbalances, it's your preference. But it's about internalizing price, understanding order flow, spotting and identifying the algorithmic signatures. See, price, it's telling you what it's doing all the time. That doesn't mean trade all the time, but it's showing you what it wants to do all the time. You just have to be patient and train your eye to see these things, and you can see how all of these concepts will start to come together. Okay? So let's take a look at some of the more advanced algorithmic signatures. Now, some of these advanced signatures, if you're just starting, they won't make much sense. But that's why you journal every day. That's why you tape read every day. That's why you take notes. That's why you revisit videos. Not only my videos, of course, obviously ICT's videos. That's why you trust this process and train your eye. You will start to see these concepts more and more in live price action, regardless of what time frame it is, okay? But let's get into this. So this is a daily SIBI, okay? This brown box is a daily SIBI. So price is entering this. Obviously, you can see it's chopping around. It's delivering price inside of this fair value gap, okay? If we enter a premium, higher time frame PD array, we need to be able to internalize if price is going to respect it and it's going to act as resistance to push us lower, or if we're going to smash through it and continue higher, okay? How do we internalize just that? Well, you can see here, price speeds up to the first quadrant. So I'm using a fib from the high to the low of this daily SIBI, and I have 25% level marked, 50% level marked, 75% level marked. If we see these candle closes above the first quadrant, it's more likely that price is going to do what? Reach for the next quadrant. If we see price showing a willingness to get above here, it's more likely to do what? Reach for the next quadrant. And obviously we have some price action in here to internalize, which we will discuss. But just that main concept, that's what we should expect. Why? What did we discuss in the beginning of this presentation? If we're bearish, if we're going to go and reject and look for lower prices, we want to see price do what? Not respect the consequent encroachment. We don't want to see bodies over the consequent encroachment, because if we were looking for a short here, the best case scenario, the highest probability short, would have been a failure to get to this first quadrant or failure to get to the CE. If we're looking for shorts, we don't want to see it close above the CE. So we see it close above here. That's indicating what? Price is not respecting this as an area of resistance. Okay? Now, you might have recognized this price fractal from before. This is exactly what we just looked at in the previous slides, looking at the order block mean threshold, the balanced price range, this blue line, the breaker, the order block mean threshold here, right? But see how these things all come together. Higher time frame quadrants. right? We're in this daily SIBI, and we're internalizing that price is going to continue to reach for buy side, and it's not respecting this higher time frame premium PD array as an area of resistance. How do we know that? Well, on top of all the things we discussed before, what do we see? Closure above the 25% level, the first quadrant of the daily fair value gap. What is this retracement doing? It's just coming back to this fair value gap for an institutional order flow entry drill. Do the bodies close back below this 25% level? No, the bodies tell the story. Once we get above that, that's the change in state of delivery, okay? We should expect, as long as we're not coming back through this first quadrant, and especially the low, we should expect continued delivery up into the 75% level and the high of this daily SIBI. Okay, so all of this is just time distortion, right? So we don't have to trade this, but we're just waiting for PD arrays to form. We're waiting for the market to show us these algorithmic signatures, okay? But what do? We create this order block, get back above consequent encroachment. Again, once we get above consequent encroachment, the algorithm's told to do what? It's, quote, allowed to go seek extended buy side, right? It's allowed to reach higher. Okay, so what do? We're reaching back down into what? A discount PD array, the mean threshold of this order block. And then what? Like we've already discussed, we expanded above, fell just short of the 75% level. Okay, so again, as we discussed, what was this doing? Coming to this breaker? Yes. But what was it also doing? Touching to the tick, the 50% level of this higher time frame PD array, this SIBI, okay? Has price reached the 75% level yet? If we're bullish, okay, and we want to see continued prices, has price reached that yet? In other words, this can be an objective. The 75% level can be an objective. Has price reached it yet? No. So as long as we see this support here, we can expect price is going to want to go complete that objective. Do we close above the 75% level here? Yes. What does that mean? Price is allowed to go reach for the next and final, in this case, the high of the daily SIBI. Okay? So see how these things all start to come together, right? So thank you guys for watching. I will do probably a part 2, maybe a part 3 on this because there's so many concepts, so many examples. Of course, every trade is contextual. Every trade is situational, depending on day, time, economic calendar, so many things, okay? So we're not just trading these for pattern's sake. We're using them to aid in building our narrative, right? To frame a trade, to frame our bias, to understand what the market's going to reach for, when it's going to reach for it. Is it going to respect this level? Is it going to disrespect this level? Okay? So I hope you guys enjoyed this video. I will be posting more educational videos as well. If you guys aren't in my Discord, the link will be in the description. It's free. There's nothing to sell there. I live trade most days whenever I can. It's very rare that I can't. But I live trade most days in there. We do daily reviews. Sometimes we do interactive studies and voice channels. So I'll just throw on an ICT video, the ones that I really found value in. And then we'll watch it together as a group, internalize them, ask questions. And it really helps expedite the process. So no matter where you are in your ICT journey, that is really beneficial for your learning, in my opinion. And if you guys do not follow me on Twitter, follow me in there. I post some additional content on there, as well as most of my execution videos. So if you want to see me actually execute me in live trades, go to Twitter. It's at RealTraderTim, but that link will be in the description as well. Other than that, make sure to subscribe, like, put on notifications, all that jazz. You guys know how it goes. But I appreciate you guys. ICT concepts is the way, and we can all win in this game. So make sure to tune in for future videos, and I hope to talk to you guys soon. Thank you.